When you invest in US stocks as a Malaysian, there are essentially two ways for you to make money. One, the company pays you dividends, or two, you take profit from selling the stocks at the higher price as compared to when you bought it first. But here's what you don't know. You might not be able to cash out the full amount of your profits thanks to taxes, which is what I'll be sharing with you in this video. Now, remember I mentioned earning through dividends earlier. Short answer to this, you will be taxed by the US and none in Malaysia. Okay, let me break down this further for you. To zoom out a little, right, dividends are categorized as foreign source income, FSI, in Malaysia. And you may say that, but Zid, I thought LHDN said that from 2022, all foreign income received in Malaysia will be taxed. So how And yes, this is true, but only half true, because I found out that under section 5.2 there is a table showing foreign income received in Malaysia which is exempted from tax from 1 January 2022 until 31st December 2026. So if you're an individual taxpayer, all types of income other than partnership income, yes, including the dividends we receive, are all exempted from tax because the criteria listed is the income has been subjected to tax in the country of origin. So we definitely fulfill this requirement because the US has already taxed us already, remember? Now, as for the US part, they have stated clearly that dividends must be taxed. And when it comes to matters of tax, we Malaysians are considered non-resident aliens. And you see, even aliens need to pay tax. And the dividend withholding tax rate is 30%. Basically, if the company pays you $100, you will only receive $70. So just keep that in mind. If you invest in stocks with high dividend yield, you are going to pay more withholding tax. Okay, now what about the profit gain when you sell your stocks at a higher price? That is what we call the capital gains, and for US residents, they pay up to 20% on their capital gains. But we Malaysians can just chill because the US does not collect capital gains tax from us at all. So whichever US stocks or ETFs etc. that you invest in, there is nothing additional to pay when you sell them, and you can enjoy the entire capital gains. And as for Malaysia, so far there's no clear-cut instruction on capital gains tax from foreign countries. But since capital gains on Bursa stocks are also not being taxed on top of foreign income exemption until 2026, I think it is safe for me to assume capital gains are not taxed in both US and Malaysia, at least for Malaysians. Untung, right? So now you understand that you get taxed for dividends but not for capital gains. But Zeda, what if I cash out money from the US back to Malaysia? Do I also get taxed? Well, good question, I must say. Well, technically, no such thing. You won't be taxed like that because you are simply transferring money from one place to another. Not like you are making any money or profits out of it, right? But what can happen is if the amount of money you transfer back is too big, it could trigger an audit check by the authorities, because under the Anti-Money Laundering Act, which states that transactions with unusually large amounts or transactions that have no clear purpose are some of the signs of money laundering, and the banks may find you suspicious. So do take note on this. And I heard I heard only, don't quote me, it's anywhere above 25,000 ringgit, so you know what to do lah. And before you ask me, what if you only transfer back to remittance platforms like say Wise and not transfer it out into your Malaysian bank account? Well, it may work and won't trigger audit check. But anyhow, Wise Malaysia has a holding limit too, meaning you can't hold more than 20,000 ringgit in your account by the end of the day. So eventually, you have to transfer them back into your bank account also, right? And sometimes it might work also lah, but keep in mind, audit checks may or may not be triggered immediately. Sometimes it can be triggered when you buy big ticket items like buying a car or getting a house. So you pandai-pandai lah. My advice is just pay your taxes accordingly because it's part of the responsibility of us as a rakyat. And also, for the peace of mind. And of course, you wouldn't want LHDN knocking on your door down the road, right? Quick pause, if you're thinking of any financial goals to achieve through the US stock market by now, here's where I would like to give a quick shout out to the sponsor of this video, Momo, a super investment platform that provides you with the macroeconomic calendar for both the US and Singapore. For example, say you want to know when the US non-farm payrolls data is out, you can check it on the economic calendar together with its historical trend changes right here and subscribe to it so that you can be the first to receive the latest updates from them. And for the best part, you can also now win some Grab vouchers through their in-app treasure hunt. Just collect 1000 Mo points and you can redeem your 10 ringgit Grab vouchers, but there's a daily limit to this lah, means first come first serve. So feel free to use my link down below to sign up for an account right now. Okay, let's get back to the video. And now there's one more tax you might need to pay even though you are not earning money. Yes, which is what we call the estate tax. And we all will, touch wood, pass away one day, right? So what to do if by that time you still have a big portion of money stored in the US? Well, this is where the estate tax comes in, where the US will tax from 18 to 40% of your US-based assets, be it your Apple stocks, treasury bonds, or your investment property in New York. But don't just screw the US market yet. As Malaysians, your first $60,000 is exempted from this estate tax, and even if your US-based asset is more than 60,000, you can skip from paying by transferring those assets to others as gifts while you are still alive. Obviously, right? And the limit of gifting without triggering a tax collection is at $17,000 per year, and it is up to you who you want to give your asset to. Can be one person or can be many, usually family members lah, right? And as for Malaysia, last time I checked, there is no inheritance tax in Malaysia. So to wrap it up, actually I also want to say that most of the tax collection processes are automated. Your brokers will handle it for you and you can know nothing about tax and still invest smoothly. The reason why I make you watch until this point is for my YouTube AdSense revenue. No, but seriously, it's always good to know what you are paying for because taxes are not permanent and they may change their policy from year to year. And rest assured, I will keep you updated with all tax related matters. That's all for now. If you found this video helpful, do help me smack that like, subscribe and also share button so that I can pay for my bill next month. In the meantime, check out this video to learn more about the different S&P 500 ETFs that come with a cheaper dividend withholding tax rate. See you over there.